Hey warriors, welcome back to another exciting video. This is your friend RAHUL Agarwal and today we are discussing a continuation of our assignment series. This is income from house property. We've already completed assignment number 1 on residential status, assignment number 2 on salaries, and today we are doing assignment number 3, one of the fairly easiest topics, but yet I see as one of the most favorite topics from exam perspective. So yes, this topic carries a lot of weightage and will be expected not just in a standalone question like what I've shown you here, but also can probably come as an MCQ question and as well as your compulsory questions. Yes, so we're discussing about a topic called as income from house property. Now, from the last 11 attempt papers which I've looked into, I think we have covered about 5 questions here. So 5 questions is what we're going to be discussing upon. But same as what we did in salaries, let's quickly do a revision on what we do on HP, people. Yes, so let's do a quick revision on HP as well. We are going back to our cheat sheets and HP is coming and covering in just a matter of half a page. HP basically comes and says, if you want to be taxing something under income from house property, there are some conditions to be satisfied. Condition number 1, there should be a house. You should be the owner of the house. If there is any vacant land, it is not under HP, goes to IFOS. If you are not the owner of the house, then also it goes under IFOS. House basically means any kind of land with a building attached to it. Yes, land with a building attached to it is a mandatory condition. Now, this building can be any building for that matter. It can be a residential house, it can be a commercial house, it can be a warehouse, it does not matter. Everything sits under HP only. It will be taxable under the head house property. There is only one exception to this rule. The exception is that if you are in the business of letting out commercial properties, then you are not taxable under HP, you will tax under PGBP. Which means if you come and tell me that I am in the business of letting out residential house, you are under HP. If you are in the business of letting out commercial house, PGBP. If you are not in the business of letting out itself, but rather in different business lines, and I am simply letting out a house, whether it is commercial or residential, will always be under HP chapter. Yes, that is what the understanding is. Then we have something called deemed ownership conditions. Deemed ownership condition says if I'm going to give my house to my spouse or to my son's wife, then it is taxable for me as a deemed owner. I will not cover into consideration when I am giving a divorce to my spouse. I am not coming into consideration when I am giving it to my minor married daughter. Those two cases will not be covered under this chapter. We'll go to a separate topic altogether. But yes, giving to spouse, giving to son's wife will be taxable as deemed ownership for me. Second, if I'm going to give this house to my minor children, then also it is going to be taxable for me. If I'm going to allot this house to someone on account of a cooperative society management rights, if there is a holder of impartial estates, if I am going to obtain possession of the house based on part payment as per Transfer of Immovable Property Act, all those things will also make me the deemed ownership of the house. Whenever you talk about a house, people, house are classified into 3 buckets. Bucket number 1 is what we call SOP house, bucket number 2 is called DLOP house, and bucket number 3 is called LOP house. LOP house basically means the house on which you are receiving rent, fully taxable. If you go on to SOP house, income tax is only 2 houses can be treated as SOP at the choice of the assessee. Assessee can decide which house he wants to treat as SOP. Every other house which is not an SOP house will then become a DLOP house and will be taxable under income tax. If you are going to be a real estate developer who is in the business of selling of houses, meaning I'm having this as stock in trade, then in that case income tax says for the first 2 years from the end of the financial year, if you are able to sell off the houses, then there is no problem. After 2 years, if your house is still unsold off, then the stock in trade will start becoming a DLOP house in your hand, which means a person will be given 2 years time for him to sell off the houses as a real estate developer. When you have house property, people, this is what the format looks like. What do you know the format of? Format comes and says start with municipal value or fair rent, whichever is higher, start with standard rent, whichever is lower, compare that with actual rent for the full year. Take the actual rent for the full year, reduce the unrealized rent if at all there is any bad debts, if you have a bad debt. Reduce that and you will compare that to get what is called as GAV. If it comes to a point that your actual rent is more than your expected rent, then you can claim your vacancy losses if you have any. Yes, so if you notice, it says municipal value or fair rent, whichever is higher, compared with standard rent, whichever is lower, compared with actual rent minus unrealized rent, and then if you have any kind of vacancy loss, you can reduce the vacancy loss only if your expected rent is less than actual rent, or in simple words, actual rent is more than expected rent. Now, if you want to reduce your bad debts, then there are some conditions to be satisfied. Condition number 1, you can only reduce unrealized rent from actual rent if the tenancy is bona fide. If you have taken reasonable steps to recover the rent for the bad debts, and third, if you have vacated the person from your premises, then you have not given him a different premises to stay. Yes, if only these 3 conditions are satisfied, can you reduce the unrealized rent from the actual rent? If not, don't reduce it. You will have to pay tax on that as well. Yes, that is what the condition says. Once you've reduced your vacancy loss also, people, you will arrive at what is called as gross annual value. On that gross annual value, you can start reducing your municipal taxes. Municipal taxes can be reduced only if two conditions are satisfied. Condition number one, I should be the one paying the tax, meaning I should be the owner of the house and the owner should be paying the municipal tax. And second, I can only claim municipal tax on cash basis, which means whatever money I pay in the current year, whether it pertains to current year, next year, past year, it doesn't matter. Whatever municipal taxes I pay in the current year will be claimed as deduction in the current year. Cash accounting is what I'm going to follow. If you don't know how to calculate municipal taxes, it is always percentage of municipal value, which means a percentage, if it is given in the question, then it is percentage of municipal value as your municipal tax. That is the understanding of it. That is what you need to pay off. That is what you need to pay off. Are we clear? Yes. With that understanding, people, you will arrive at what is called as net annual value. On this net annual value, you can start adding your past bad debts recovered, unrealized rent recovered of past years, or arrears of rent recovered of past years. Why am I adding this here, people? Because in income tax, when you add this number, you have to give a 30% deduction. So I'm adding it before claiming 30% deduction, so that when you take this number, automatically a 30% deduction is calculated. Yes, so take your net annual value. On this, you will now allow a 30% standard deduction. After you allow 30% standard deduction, you can also claim interest on loan. How do you claim interest on loan? If you are going to give a LOP house or a DLOP house, no restriction whatsoever. Whatever interest you have incurred on the house property can be claimed as deduction. But if it is not going to be interest on LOP or DLOP, then you can claim interest on SOP house only if you are under old tax regime. And old tax regime comes and says, if you want to claim interest on SOP house, then you need to come and satisfy three conditions. Condition number one, loan should be taken after 1st April 1999. Condition number two, loan should be taken for purchase or construction of the house. And condition number three, house should be completed within 5 years from the end of the financial year in which the loan was taken. If you satisfy all the three conditions, then each house you can maximum claim 2 lakh rupees ka deduction. If you don't satisfy the condition, you can still claim a deduction, but the deduction gets restricted to 30,000 rupees. Understand very carefully. Just because I took a loan for repairs does not mean I will not get deduction. It means I will get a deduction, but it will be restricted to 30,000 rupees, and that is what the statement is. However, notice, because each house you'll get 2 lakh rupees, income tax also clarifies to you that you can overall also only claim 2 lakh rupees ka deduction, which means house 1 SOP, house 2 SOP, both put together also you can only claim 2 lakh ka deduction. That is what the understanding is. Any doubts on the understanding? Yes, good. Then comes your special scenarios, people. Some special scenarios for you to keep in mind. One, if you have taken a loan even before the house was completed or constructed off, you will now have something called pre-construction interest. Pre-construction interest basically says start from the date of the loan and take the interest up to 31st March of the preceding year in which the house was completed off. Which means if the house is completing in 25-26, 31st March 2025 variko you will take the interest. That interest is what you will accumulate and you will allow it over the next 5 years. So starting from the first year, you can allow it for the next 5 years. Now when you're allowing it in the next 5 years, don't claim it over and above the 2 lakh rupees. Take the interest, add it to your SOP, and then comes an overall restriction of 2 lakh rupees. What is it? Take the interest, add it to SOP, and then claim a restriction of 2 lakh rupees. This is your special scenario number 1. Special scenario number 2 comes and says, if you are at any point of time going to have a house where part of the house is LOP and part of the house is SOP, which means some months I took it for LOP and some months I took it for SOP, income tax says, assume that the house was fully LOP for the full year. Yes, even if you had SOP for some months, I don't care. I'm going to assume that it is LOP for the full year. But here is the change. The actual rent will not be taken for the full 12 months. It will only be taken for the limited period of what the house was rented out for. Understand the difference between vacancy loss and part LOP, part SOP. Vacancy loss means the house was not occupied by anyone for the remaining period. There is a vacancy in this, which means I was trying to give this house on rent, but no one took the house. That is a vacancy. I will then take AR for full year and reduce vacancy loss if I am found to be a good assessee. If I'm going to go to a scenario where I'm coming and saying, no, part of the month it was LOP and part of the month it was SOP, then in that case, income tax will say for the full year, assume it is LOP, but take AR only for the LOP period. Don't take AR for the SOP period because that was anyway occupied by you. Rent is 0. Clear? Yes, next. Special scenario number 2 comes and says, if one house left, part of the house is SOP and part of the house is LOP, income tax says whatever common items you have, split it off accordingly. Some common items will become LOP, some common items will become SOP. Ratio will be given in the question, split it accordingly and then compute the answer accordingly. Special scenario number 3 comes and says if there is a joint ownership in the property, then all common items will be kept as it is. Whatever is the interest which is paid on the house, if it is paid jointly by both the parties, then both the parties will get each 2 lakh ka deduction, which means person A, person B, if 4 lakh rupees of interest has been given, 2 lakhs he can claim for his share of this house and 2 lakhs he can claim for his share of this house. Each person will get 2 lakh ka deduction. So it is 2 lakhs per owner per house, overall restriction of 2 lakh rupees. Clear? Yes. And finally, fourth point which comes and says if you have any composite rent, which means same house, there are house also, amenities also, then for the amenities, whatever rent you are receiving will not be taxable under HP, will go to IFOS chapter or PGPP chapter as the case may be. Yes, so if the question comes and says I have received rent for house also, amenities also, house you will tax under HP, amenities you will tax under IFOS, and that is what the special scenarios is. If you do that special scenarios properly, people, you will arrive at what is called as income from house property, and this is what it is. Yes, and I've been extremely fast on the note because I know this is a very small chapter and a very easy chapter. You would have done it yourself. I want to more focus on the questions. Let's see if you're able to answer the questions along with me. Shall we go into the questions, people? 5 questions for us to practice together. Let's see if you're able to get the answers with me. Yes. So I am opening up the questions. Let's see if you're able to answer the questions. Question number, assignment number 3. Yes, question number 1. Let's see the question, people. Easy question. Question says, I am Mr. Ravi. Ravi is a resident in India owning 2 house properties. One house property is in Delhi and another house property is in Kanpur. Okay, 2 house properties. The property in Kanpur is SOP. They have confirmed to me Kanpur property is SOP. However, by the property in Delhi is let out during the year, which means I have been confirmed my Kanpur property is SOP and my Delhi property is LOP. Okay. The particulars of Delhi house is given to me. People, why are they giving me Delhi house? Because SOP la I cannot claim any deduction itself. SOP la only interest on loan can be claimed deduction. Other things are anyway not relevant. Yes, so deductions are given to me. The standard rent is given, municipal value is given, fair rent is given, rent received is given. Always stick to the format. Just because SR is given first does not mean you can take SR first. It is always MV versus FR, whichever is higher, compared to SR, whichever is lower. Keep that in mind. Yes, municipal taxes which is paid by Mr. Ravi, always check this properly, people, because sometimes they may have given the tenant's name. Here Ravi means the owner, which means municipal tax can be claimed as deduction. 5% of municipal value has been confirmed. Municipal tax paid by Ravi on 10th June 2025 for Kanpur house is 3,500. People, for Kanpur house can you claim? No. Kanpur is an SOP house, not relevant at all. Can't claim the deduction. Ravi has taken a loan from SBI of 35 lakhs at 12% per annum on April 2022 for the purchase of Delhi house. For the LOP part, I have taken a loan. The stamp duty of this house was given as 40 lakh rupees. Okay. Mr. Ravi purchased a plot in Kanpur in May 2022 and the construction of the house was began in June 2022, was completed in December 23. So now they have confirmed that for the Kanpur property, for Delhi also I took a loan, for Kanpur also I took a loan. For the Kanpur, what happened is, yeah, for the Kanpur, what happened is I purchased a plot in 2022, began construction in 22, completed house in 23, which means Kanpur has a pre-construction interest. Ravi has taken a loan of 25 lakhs at 10% per annum on 1st July 2022 for the construction of this house. No repayment has been made so far for both the loans, which means now I have a Delhi house with construction normal interest and Kanpur house SOP for pre-construction period. During the previous year 25-26, Ravi has earned a salary income of 18 lakh rupees. You are required to compute income under default tax regime. Very good. People, when default tax regime has been asked, things have become that simple, which means can I come and say this whole part of Kanpur is not even relevant. I don't even care about the Kanpur part because default tax regime comes and says you can't claim any SOP deduction itself. You can only claim LOP deduction. Appa, what am I supposed to do with the pre-construction period? Not relevant information. Simple, straightforward, skip information. Only go to the Delhi part. Yes, so Delhi is what I need to check and Delhi is what I need to find an answer of. I think we can easily finish it off. Let's check municipal value or fair rent, whichever is higher, therefore it becomes municipal value. Municipal value or standard rent, whichever is lower, therefore the answer is 1,72,000. Yes, so 1,72,000 is going to be confirmed as my expected rent. From that expected rent, I'm going to take my rent received. Rent received is 15,000. 15,000 into 12 will give me 1,80,000, which means my GAV becomes 1,80,000. From the GAV of 1,80,000, I can claim my municipal taxes and then claim my interest. What the difficulty in the question? People, had they given old tax regime also, I would have been happy because then I could have at least claimed the interest on loan as pre-construction interest. Additional data would have been given to me. Nothing is given, not even relevant. We can finish this question in a single straightforward chart. Yes, let's finish it off directly, people. I think we don't have to put much efforts into this. So I am going to create what is called as question number 1. Question number 1 says computation of income from nee, I think question wanted total income, if I understand this properly. What did my question want? Question wanted total income. Yes, question wanted total income, so I am going to say computation of total income of Mr. Ravi. Yes, now pay attention to this part, people, where the question comes and says I don't want ATR, I want DTR, so I'm going to put DTR here. Yes, now because it is multiple heads of income, like I've always told you, multiple heads of income means I'm going to create 3 columns for myself. I'm not going to create 2 columns, I'm going to create 3 columns for myself to make my life easier. Yes, so let's put 3 columns out. Now in this, what am I going to do? I'm going to first put salaries. I think salaries is going to be straightforward because the question says I have some salary given. Let's call it basic salary. Basic salary has been confirmed as 18 lakh rupees. Now question says he has earned a salary income. When he's earned a salary income, it's not income from salaries. Earned a salary income means I've received the money before standard deduction, and therefore I need to give my standard deduction properly. Be very careful on the standard deduction, which means 75,000 needs to be reduced from my computation module. Answer is 17,25,000. Yes, I hope you have not made mistake on this, people. This is not a mistake you can make. Be very careful about this. Next, coming to 2, I'm going to call about income from house property. I think here I'm just going to directly go, people, because I don't have to spend time on this. My GAV has been confirmed to me. My GAV is 1,80,000. Yes, we did MV, FR, SR and all. We got 1,80,000. In this 1,80,000, what has happened? I have now claimed my municipal tax. What was my municipal tax in the question? My municipal tax in the question has been confirmed as 5% of municipal value. Yes, so let's put 5% of municipal value. 2,05,000 into 5%. Answer comes to 10,250. Answer comes to 10,250 minus 1,80,000 is the statement, and therefore the answer is 1,69,750. Yes, this is going to be my NAV. On this NAV, what can I do, people? I can straightforward claim my deductions. So which means I'm going to claim my normal deductions. My normal deductions are going to be what? I'm going to claim my 30%. Yes, so let's claim 30% of NAV as a deduction. So 1,69,750. 1,69,750 multiplied with 30%. Answer comes to 50925. Yes, so 50925 ka deduction I'll claim. Second is going to be my interest on loan. Now look at this question carefully. I think interest on loan mein what is going to happen? I'm going to have an SBI interest of 35 lakhs at 12%. Nowhere has the question ever come and mentioned to you the fact that the house is pre-construction. It just took the loan on 22. That's all. They have not mentioned that the house was completed on a later day and all. That all information was given for Kanpur property. Yes, so Kanpur property is anyway not relevant. I'm looking at Delhi property. Delhi property ka 35 lakhs at 12% will be the straightforward computation. Yes, I'm going to simply come and say let's do 35 lakhs ka 12%. 35 lakhs into 12%. Answer gives me 4,20,000. Answer gives me 4,20,000. Now what is going to happen, people? 4,20,000 is going to be my interest. Now this is a huge number. I don't even have that much to claim. Yes, so 4,20,000 worth of interest. What am I going to do? I'm straightforward going to come and say what is going to be my interest on HP. Let's find out. It is going to be 1,69,750 minus 50925 minus 4,20,000. Answer comes to 3,01,175. Yes, now here is where the challenge comes. For those who have done DTR properly, people would probably know when it comes to DTR, DTR has some specific rules, especially for HP. HP special rules come and say when it comes to DTR that when you have a loss from HP, it can only be set off against income from HP. If you don't have income from HP, then that number will get permanently lapsed. You cannot even take it forward. Can you set it off against salaries? No. Can you do anything with that number? No. You cannot do any adjustment with that number because that number will directly get lapsed off to the extent that you have HP loss, which means this HP loss will get fully lapsed. Will get fully lapsed because you are under DTR scheme, which means no number will go into HP. No number will go into HP, and therefore my income directly becomes the same number of salaries, which is 17,25,000. Which is 17,25,000, and this is what my income for the current year is. This is what my income for the current year is. I think this is the only reason why they gave DTR people, because they wanted to test you on a different topic. The topic to the fact that when it comes to set off chapter, set off comes and clarifies if you are under DTR, HP loss can only be set off against HP income. If there is no HP income, you cannot do anything with it, simply lapse it off. That is what the answer on this adjustment was. So the answer is 17,25,000 because the person is going for DTR. Are we clear? Yes. Now, if you do it in ATR people, I think the answer would have been very different. But nevertheless, since the question does not want, I'm not going to spend time on that. I'm going to finish your answer on DTR scheme. Clear enough to go? Any doubts on this part? Shall we proceed forward? Yes, let's proceed forward. Let's see how question number 2 looks like. Maybe question number 2 is a little more interesting. Question number 2 says, I am Mrs. Anjali, US citizen, resident and ordinary resident. Person is in ROR. She owns a house property in Chicago, USA, which she uses as a residence. Annual value of the property is 20,000 rupees with the exchange rate assumed as 75 per dollars. People notice again, question says I am in SOP. Property is occupied by her. When the property is occupied by her, the annual value and all is not relevant. I'm going to skip information, which means not relevant at all. Ignore information. 75 per USD is also not relevant. In addition, she took ownership and possession of a flat in Surat on 1st July 25, which is used for her self-occupation during her stay in India. In the current year, she has taken a property. Again, flat is in Surat, 1st July 25, for the purpose of self-occupation. This also is my second SOP house. I can have up to 2 SOPs, no problem. The flat was occupied by her for 7 months. The municipal value is 3,84,000, not relevant. Fair rent is given as 4,20,000, not relevant. She had paid a property tax of 16,200, not relevant. Sewerage tax of 1,800 also is not relevant because this is SOP. Properties can't claim deductions. For the purchase of the flat of Surat, she had taken a loan from Standard Chartered Bank on June 2024, some past year. The interest on loan amounted to 49,200 before April 25, 50,800 for the period April to June, 1,31,000 for the period July to March. Now, this is your pre-construction interest. Notice, the loan was taken in June 24. House was occupied, the house was purchased by her only in July 25, which means what is going to happen from June 24 till 1 year prior. Yes, July 25 is 25, 26. Ignore 25, 26. Come to 31st March, which means 31st March 25 varicom, whatever interest I paid will be called as pre-construction period. Yes, so therefore in this question, if you notice, the interest is 49,200 up to April. Up to April it is 49,200, which means this interest is going to be called as my pre-construction interest. This interest is going to be called as my pre-construction interest. The balance to interest is going to be my current year interest. So this is my current year interest. This is also my current year interest. Additionally, she has also owned a property in Ranchi, which was sold in March 2024. Some past year itself, she has sold it off. In respect of this property, she has received arrears of rent of 60,000 rupees, which has not been previously taxed. I now have arrears of rent. Notice the format, people. When you have bad debts recovery, you add it before NAV. Yes, which means you take the NAV and then you claim 30% deduction on this also. So this number also is eligible for 30% deduction. Compute the income from house property. If she is shifting out of default tax regime, person is going for ATR. Person is going for ATR. Very simple, straightforward question, people. US gets ignored, Surat gets allowed for interest on loan, and then this property of I don't know what this is, Ranchi property is going to be taxable. This is what the fact pattern is. I think we can do this question very simply, straightforward. Yes, shall we put the notes on this? Let's put the notes, people. I am Mr. Anjali, Mrs. Anjali, sorry, I am Mrs. Anjali. Question number 2. Yes, question number 2 is computation of income from house property of Mrs. Anjali for assessment year 26-27 under ATR. Under ATR, this is what the scheme is going to look like. Yes, so let's put the facts accordingly. Let's see if you're able to match the answer. Yes, I'm going to put this out directly, people. What am I going to do? I'm first going to come and say US property. Yes, so first US property is SOP, therefore the answer is 0. Second, I'm going to say what is called as Mumbai property. I think the property was Mumbai. I'm assuming it is Mumbai, people. I don't remember it, but nevertheless, Mumbai property, again SOP property. The only thing I can claim is called as interest on loan. Yes, now how will I claim my interest on loan? Interest on loan is some things I have to keep in mind. First, I'm going to talk about pre-construction interest. What is my pre-construction interest? It was 49,200 up to April. This will be divided for 5 years. Yes, so it is going to be 49,200 divided by 5 years. The answer is going to be 9,840. I hope this is clear to everyone. Yes, next I'm going to talk about my current year interest. Now what is my current year interest, people? Current year interest was whatever numbers they gave. I think the current year interest data was given to me as, let me check. It was 1,31,300 and 50,800. So 1,31,300 plus 50,800. Answer is going to be 1,82,100. Yes, so taking my total interest into consideration, answer was 9,002, let me put it here, 9,840, 1,82,100. If I total this number, I think it should come to 1,91,940. Yes, 1,91,940 can be fully claimed as deduction, and therefore my HP loss becomes 1,91,940. This is my answer, simple, straightforward. Yes, that brings me forward to the next set of computations. I am at the last stage of my Ranchi property. Yes, so let's take my Ranchi property as well. I'm going to do point number 3, which is my Ranchi property. Now, if you notice, people, Ranchi property, I have recovery of rent. I have recovery of rent. I think the question was about 60,000 rupees, if my memory serves right. Yes, it was 60,000 rupees. Yes, on the 60,000 rupees, always remember to claim your 30% standard deduction, which means 18,000 rupees ka deduction I will claim, and therefore my number will become 42,000. This 42,000 can be set off against my HP income, because again, same head of income, intra-head adjustment is permitted. So 1,91,940 minus 42,000 will give me a HP loss of 1,49,940. Yes, so 1,49,940 is my HP income. I think that is what the question wanted. Question only wanted income from house property. Yes, this is my answer, simple, straightforward. So 1,49,940 is going to be my income from house property. Clear? Yes. Now, one thing that you'll have to write an additional note also, people, is it will be taxable regardless of sale of property. Yes, so you'll have to mention this as a note in examination, where you can say, even though the house property is no more the ownership, because it pertains to the year in which she was the owner, it will be taxable under income from house property. Yes, so this is a very important thing to be written down. You will get extra marks for this. You have to write that line carefully. Yes, so you have to mention that line very carefully. Any doubts on this part? I think this was an easy question as well, people. No complications in this question whatsoever. You could have easily find the answer from here. Correct? Shall we proceed forward? Let's proceed forward. We are at question number 3. I think the pace is going on really well, people. I'm appreciating the pace. Yes. So if you're able to match my pace and you're able to do it with me, amazing job. If you're taking a little bit of a time extra, no worries. It takes time. You're doing an assignment, so you have to do it peacefully, nicely, and properly for yourself. You should have already done this answers, is what I feel. Just cross compare and check the answers properly. Question number 3. I am Mr. Sandeep, manager in CTL Private Limited, furnishing the following information to you. I think this is a question mix up of salaries and HP. This is why I put it in a HP, because you probably may have not done HP before you would have done salaries. Question says my basic salary is 55,000 per month. I am entitled to a commission of 2,500 per month. Now, people, every time you look at commission, always ask yourself whether it is fixed commission or turnover commission. This is fixed commission. A company owned accommodation is provided to him. Furniture costing 2,40,000 was also provided. I have been given a company owned accommodation, 10% of salary, RFA taxability. Furniture of 2,40,000 also provided, 10% of cost of the asset to be taxable as furnished accommodation. Person has taken a personal loan on 1st September 25, which interest is 7.75. Entire loan is outstanding. SBI interest rate is 12.75. Concessional loan perk comes and says concessional interest rate, SBI interest rate minus concessional interest rate into loan amount outstanding on the end of each month. Luckily, none of the money has been paid. Entire loan is outstanding, so you can do it in a single shot itself. Although, please be mindful on the period. The period says 1st September 25, and that is more critical, which means I was not having the loan for April, May, June, July and August. 5 months I was not having, only 7 months I was having the loan. That is more important. So the months are very critical. Sandeep is also owner in house property of Kolkata, which he constructed in 1718. Property is constructing of 4 identical units. I have a split of house here. He occupied 1 unit for his residence and 3 units for a let out of 20,000 per month per unit. Municipal values 9 lakhs, municipal taxes 20%, fair rent and standard rents are also given to you. One of the unit was let out and was vacant for 6 months. I have a vacancy loss coming into picture. Interest on loan taken for the construction of the house is 2 lakh rupees. Notice carefully, people, this interest on loan is not for the LOP house, neither for the SOP house. It is for the full house. It is for the full house, and that is where the critical part is. You will have to apportion this accordingly into SOP and LOP. Compute the total income if he has opted out of default tax regime, which means again I am going for ATR. I am going for ATR, and this is what the fact pattern is. I think we can do this question very easily, people. It should not take much of time. Very small adjustments, very simple adjustments. Let's do it together. I think if you've already done it, just cross verify it along with me. But yes, I am going to do the computation question. Question number 3. Question number 3 says computation of total income is the question. Yes, computation of total income of Mr. I guess this guy is Sandeep. Computation of total income of Mr. Sandeep under ATR scheme. Yes, now people, I'm noticing multiple heads of income. Therefore, very obvious, what are we going to do? We are going to do 3 columns. Yes, same format, no changes in the format. Let's do 3 columns. Let's get the right answer. I am going to do 3 columns. First column is called salaries. Under salaries, question says I have a basic salary given to me. What is my basic salary? Confirm, my friends. Basic salary is 55,000 into 12. So it is 55,000 into 12. Answer is going to be 6,60,000. Correct. Next one, question comes and says I have received a commission also. So I'm going to add my commission to the statement. Commission is going to be 2,500 into 12. Answer is going to be 30,000 rupees. Yes. Then I have a RFA. But before I take my RFA, I've always told you, let's take the previous informations first. So I have something called as a concessional loan. So let me add my concessional loan itself. Yes, what am I going to do, people? My concessional loan is going to be 12.75% of SPI minus 7.75% of my normal interest. Yes, multiplied with loan of 3 lakh rupees. Multiplied with the loan of 3 lakh rupees. But notice I am only getting it from September, which means April, May, June, July and August it's not there. 3 and 5 months it's not there. 7 months it is there. So into 7 by 12. Correct. 12.75 minus 7.75 should give me what, people? 12.75 minus 7.75 should give me 5%. 5% will get multiplied with 3 lakh rupees, will get multiplied with 7 and then divided by 12. Therefore, the answer is 8,750. Will become 8,750. Correct? Yes, good. Next, what is pending? I think that's all we have in salaries except for the RFA part. So let's take my RFA now. Yes, so let's add my RFA computation to this. I am going to take my RFA computation. Now, what does RFA say, people? RFA says it is 10% of salary. And if you remember salaries, what is it? It is basic plus DA forming part plus all bonus, all commission, all taxable allowances, which means here it is not just 6,60,000, it is 6,60,000 plus the 30,000. It is 6.9 lakhs. It is going to be 6.9 lakhs. So let's be very, very careful about this fact because you have to take the commission also into consideration. Yes, so it is going to be 10% of 6,90,000, which is 69,000. Which is 69,000. Apart from that, you have got your furniture. Furniture is going to be 10% of the cost. So it is going to be 10% of 2,40,000. 10% of 2,40,000 is going to be 24,000 rupees, and this is what my salary statement looks like. I think this is all my salary statement is. So let's add the salary statements, people. It's going to be 6,90,000 plus 8,750 plus 69,000 plus 24,000, and the answer comes to 7,91,750. Yes, now what am I going to do with the 7,91,750? I am going to claim my standard deduction. Because there is no other income, people, no other entertainment allowance, no professional tax, direct standard deduction. Remove my 50,000 ka standard deduction, and therefore my answer becomes 7,41,750. This is my income from salaries. This is my income from salaries. I hope this makes sense to everyone. Yes or no? Yes, yes, I think this should have been easy, people. Let's now proceed on to the chapter which we are doing this assignment for. Then let's move on forward to what is called as income from house property. Yes. Now, when it comes to income from house property, I want you to keep this in mind. When it comes to income from house property, your presentation makes a lot of difference because it helps you do your things properly. First things, when it comes to income from house property, I'm going to say what is called as LOP house. And next to the LOP house, I'll always mention to the fact as to how much is the LOP house. Notice in this, they say there are 4 units, and out of the 4 units, 3 units have been let out. Yes. And therefore, writing that one statement can make a lot of difference for you. So you have to do that very carefully. It says owner of house property, 4 units, occupied 1 unit, and 3 units were let out. So actual rent is given to me, but before that, let's check the municipal value. So I'm going to do municipal value. Municipal value is 9 lakhs. Municipal value or fair rent, whichever is higher, therefore 9 lakhs. 9 lakhs versus 8 lakh 50, whichever is lower, therefore 8 lakh 50 is going to be my expected rent. So what am I going to put? I'm going to put my expected rent as 8.5 lakhs multiplied with 3 by 4. What have we done, Rahul? I've taken municipal value or fair rent, whichever is higher, compared with standard rent, whichever is lower, but that was for the full house. I don't need for the full house. I need it only for 3 by 4. So I'm going to do 8,50,000 into 3 by 4, and answer comes to 6,37,500. I hope this makes sense. Yes, with that, people, now I'm going to take my actual rent, and be very careful about this. Actual rent is never taken for actual period. It is taken for the full year because we have vacancy in the question. Therefore, it is going to be 20,000 per month into 3 units into 12 months. Yes, check karo people. 60,000 rupees into 12 months is going to give me 7,20,000 rupees. Whichever is higher. Yes, the moment I saw whichever is higher, I've confirmed to myself the answer is 7,20,000 rupees. Now with the 7,20,000 rupees, because my actual rent is showing higher than expected rent, I can now claim my vacancy loss. Yes, now is my eligibility of vacancy loss coming into picture. I hope this was clear to everyone. This is how the best format, people, so that you never make a mistake in examinations. Question says I have a vacancy of 6 months for one of the unit. Yes, so one of the unit alone is vacant, so therefore I have vacancy loss for 20,000 rupees for 6 months, which is going to be 1,20,000. Which is going to be 1,20,000. I hope this is 20,000 rupees per unit only, people. Yes, it is 20,000 rupees per unit, and therefore 7,20,000 minus 1,20,000 has given me an answer of 6 lakh rupees. Has given me an answer of 6 lakh rupees. Correct? Correct. Yes, very good. I think apart from that, people, the question comes and says there is something called municipal tax in the question. So let's take the municipal tax as well. Now be very careful on the municipal tax, because municipal tax again is 9 lakh rupees for the full 4 units. I only want 3 by 4. So therefore it's municipal tax of 20%. So it is 9 lakh rupees into 20% into 3 by 4. Yes, so it is 1,35,000 rupees of municipal tax. I hope this makes sense. Yes, what is it? It is 20% of 9 lakh rupees for 3 by 4 period. For 3 by 4, and this is how you have to do the statement. Yes, so it's every step of the way being very careful on what the computation looks like, people. One small mistake in the computation and the answer can go horribly wrong. So be very, very careful on that adjustment of. Shall we proceed, my friends? Yes, let's proceed off. Let's proceed off. What is going to happen? I am going to take my 6 lakhs minus 1,35,000 card deduction. 6 lakh minus 1,35,000 gives me 4,65,000. Yes, so this 4,65,000 has been confirmed as my NAV. On this NAV, I can now start claiming my deductions. What are my deductions? My deductions is point number A, 30% of NAV to my adjustment. What is 30% of NAV? 30% of NAV is 1,39,500. Yes, then I also have my interest on loan. Now look at this interest on loan carefully, people. 2 lakhs was the total loan, but I only need it for 3 by 4th of the house because my balance is going to SOP. I'll have to write this separately. Yes, so it is 2 lakhs into 3 by 4, which is 2 lakhs into 3 by 4. Answer is going to come to 1,50,000. Yes, now I can add my 1,39,500 to this. Answer is going to go 2,89,500. Yes, so 2,89,500 ka deduction I can claim out of my 4,65,000, giving me my answer as 1,75,500 rupees. Now this is my income from LOP house. Look carefully, I've only done my LOP house till now. Yes, that gives me my SOP house, so I can directly write my SOP interest. SOP there is only one deduction you can claim, my friends. The SOP deduction is what? The interest on loan. So let's claim only the interest on loan as a deduction. I have already out of 2 lakhs, 3 by 4th have been claimed above, which means 1,75,000 I have claimed on the top. Sorry, 1,50,000 I have claimed on the top. So balance interest on loan is what I can claim here, which is going to be another 50,000 rupees. Yes, so this is going to be reduced off, which means out of 1,75,000 I am going to add another 1,25,500 rupees becomes my income from house property. With that in my hand, I already have my income from salary also. So let's take my income from salary as well, people. What is going to happen? 1,25,500 is going to be my income from house property, plus 7,41,750 is going to be my income from salaries, totaling to 8,67,250. Totaling to 8,67,250, and this gives me my total income. This gives me my total income. Simple, straightforward. Yes or no? Yes or no? I think this was a little good question, people, because of the extent of 3 by 4 and 1 by 4. If you have done the 3 by 4 and 1 by 4 properly, you will get the right answer. So this alone is something for you to keep in mind. If you can do this properly, then you will have a better answer in examinations. So be very, very careful about it. Clear? Yes? Good to go? Perfect. Let's proceed forward, people. I think we have 2 more questions. Yes, 2 more questions for us to figure out. Let's see if you're able to answer the 2 more questions. I think these ones should be a little lengthy ones, people, because this question number 4 looks very lengthy. I don't know for what reason it looks lengthy. Let's see question number 4 properly, and let's do the proper solutions on this. So, question number 4. It says, I am Arjun and Mr. Rohit started constructing independent residential houses on the plot of land situated in Delhi. 2 separate parties. Each house is comprised of a ground floor and a first floor, having a built-up area of 1,800 square feet each. So, I have 2 persons, Arjun and Rohit. One is taking ground floor, one is taking first floor. Mr. Arjun commenced construction on 1st April 23 and completed it on 1st April 25. Notice, people, 1st April 23 I started and 1st April 25 I completed, which means there is a pre-construction interest. Arjun is going to have a pre-construction interest of 23-24 and 24-25. 1st April only I completed, no? So 31st March variko it is 24-25 fully included. So 2 years ka pre-construction. He occupied the entire house for his personal residence from the rate of completion. Matlab, Mr. Person, who is this Arjun, is going to have an SOP property. So Arjun has been confirmed to have an SOP property with 2 years ka pre-construction. Next, Rohit also commenced the operations on 1st April 23 but completed on 30th September 25. People, will that make a difference? No, because 30th September 25 falls within financial year 25-26. I'm going to ignore the full financial year 25-26 and I'm only going to take up to 31st March, which means here I will again come and say I don't care. I'm going to take the same pre-construction period of 2 years even for Mr. Rohit. Now, what is Mr. Rohit doing? Mr. Rohit has occupied the ground floor on 1st October 2025 for his own residence and has let out the first floor for a monthly rent of 20,000 rupees from October to December. This is what the fact pattern says. So, which means now Arjun is going to come and say that, sir, I am going to take my house and I'm going to split into 2. One I'm going to do SOP part, one I'm going to do LOP part, equal shares. Yes, the tenant vacated the premises on 31st December and Rohit occupied the house from 1st January, which means now there is a problem. Notice, no, people, now there is going to be a part year SOP and part year LOP. There is going to be a part year SOP and part year LOP. This is what the problem is going to happen. The following additional information is given to you. The fair rent and the municipal value of each floor is given as 1,72,000 per annum respectively. MV or FR, whichever is higher, which means I have it for each property. Notice, no, it is only for each floor. It's not for the full building, people. It's for each floor. This is very, very important for you to keep in mind, which means I don't need to do an apportionment between SOP and LOP. It is already given to you. Yes, next, municipal taxes is 8,000 each paid by Arjun and Rohit. Now, here is where the critical part is. When you say municipal taxes each is paid, it is not given for each floor, which means this is for the full house. So this will have to be apportioned accordingly. Next, repairs and maintenance expenses is 28,000 by Arjun and 30,000 by Rohit. I don't care. People, R&M has never been claimable by those people, so it does not matter anyways. Arjun has availed a loan of 15 lakh rupees from 23. Rohit has availed a loan from 1st September only. Even though Rohit started the construction in 1st April, he has only taken the loan from 1st July, which means I am only going to take interest from 1st July. I am not going to take it from 1st April. Very important. No principal repayment has been made, therefore does not matter. You are required to compute the income from house property of Arjun and Rohit for the assessment year 26-27. Assuming Arjun and Rohit opt out of default tax regime, both are going for ATR. Both are going for ATR. I think Arjun should be fairly easy, people. Arjun should not have a trouble because Arjun ka direct answer. Arjun is SOP. Rohit is where you have to pay a little bit of a critical attention because many facts are changing here, especially on the fact that the person has only got this property rented out itself from October only. So October to December 3 months ka let out. December, January se March ka SOP part. But what happened before October is it's under construction. That is also to be kept in mind, based on which the apportionment will change substantially. So be very, very careful on this adjustment of. You have to do this very carefully. I'll show you how the adjustments looks like. Pay attention to it. Yes, shall we do it properly? Let's do it properly. What are we going to do? Let's prepare the notes, people. I am going to go into my notes and I'm going to prepare this. Now, look at this carefully. I have two parties here. I don't have one party. I have two parties, which means I need to properly prepare this note for both the parties together. Yes. So let's first put out the note. I am at question number 4. Yes. So what is going to happen? I am going to be at question number 4. Question number 4 is going to be computation of income from house property of two parties. I think there are two parties. Party number 1, if I have to look into my notes, is going to be Arjun. Yes. So I'm going to do computation for Mr. Arjun under ATR. Now notice, people, Arjun is going to do what? Arjun is going to take both the properties and Arjun is going to only live in that. Yes, Arjun is not going to let out anywhere. So Arjun ke liye to I can straightforward come and say everything is SOP. I don't even have to do the computation well. Yes, so I can straightforward come and say what is going to happen. For Arjun, I'm going to say all the properties are SOP. The only thing I can have to claim is interest on loan. Yes. Now how am I going to claim the interest on loan? First, I'm going to calculate what is my pre-construction interest. So let's calculate my pre-construction interest. Question says Arjun took the loan from 1st April 23 itself, and Arjun has to be taken the property from till 31st March. So 31st March data does not change, which means pre-construction interest is going to be for 15 lakh rupees at the rate of 12% for 2 years. Correct, not correct? Yes. So that is all that I have to keep in mind. Yes. So I'm going to do this computation directly. I'm going to straightforward come and say that I'm going to have Arjun for 1 lakh, 15 lakh for 12%. So 15 lakh for 12% gives me 1 lakh 80 for 2 years, which is going to give me 3 lakh 60,000. Yes. Now this 3 lakh 60,000 has to be divided for 5 years because this is pre-construction. So let's divide it by 5 years and therefore the answer comes to 72,000. The answer comes to 72,000. Next, let's also check what happened in the current year. Has he repaid any loan off? The question says he has just taken a loan. He has occupied it for personal purposes. Rohit has come to this part. Arjun has come. No principal repayment is made by either party till 31st March, which means current year also no interest has been paid off. So there is also going to be current year interest. What is my current year interest going to be? Current year interest is simply going to be 15 lakh rupees at the rate of 12%, which is going to be 1 lakh 80,000 directly. Yes, if I take this total together, the answer becomes 2,52,000, and if it is 2,50,000, I will have to restrict this. I will have to restrict this because it is an SOP property. SOP property deduction becomes 2 lakh rupees, and this is the answer, full stop. Yes, no other incomes have been given for Mr. Arjun, and therefore this is what the statement is. Direct answer, 2 lakh rupees is the solution. Is the solution. I hope this makes sense. Yes, good. Now comes the difficult part. Let's talk about what is going to happen for Mr. Rohit. What is going to happen for Mr. Rohit? Yes, now this one is a little tricky, people. I don't want to do it as LOP and SOP line by line. I would rather probably do it together as LOP and SOP bracket. So let's do one thing. I'm going to create two columns, people. My two columns will probably help me do better. One is going to be called an LOP property and one is going to be called my SOP property. Yes. Now what is my SOP? If I understand this properly, I think they came and said one of the two is going to be LOP and one of the two is going to be SOP. I want to see this quickly so that I can write the right answers. What is going to happen? I am coming and telling Rohit has also come and manufactured, completed September, occupied the ground floor for his own residence, let out the first floor, which means ground floor is going to become self-occupied and first floor is going to be let out. Yes, so that is the facts which I'm going to keep in mind. So SOP is going to be ground floor and LOP is going to be first floor. Now notice this also carefully, people. When it comes to LOP also what is happening, only 3 months is LOP, everything else is SOP to that extent. Yes, so that is what has to be kept in mind. Now I need to do this properly, which means let me first find out what is my ER. Let me first find out what is my ER. If you notice my ER, people, ER comes and says, I have my municipal value and fair rent given to me for each floor. Ground floor, I anyway don't care. So let's look at only the first floor. First floor comes and says, my municipal value is 1 lakh and my FR is going to be 72,000. I have not been given my SR, so I'm going to take whichever is higher, which means number is going to be 72,000. So my ER is going to be 72,000. But here is the catch point. Notice ER for 72,000 is given for the full year. Now the property itself came into existence only from the month of September. Yes, so which means when I have the property only from the month of September, it is quite unfair that I take that full year. I have to take the property and completed, yeah, he only took it from October. So April, May, June, July, August, September, 6 months, the property was not even there, which means can I take ER for 72,000? Answer is no. I can only take ER for 6 months because that is when the property came into existence, and therefore my ER itself is going to be 36,000. Agreed? Yes. With that understanding, let's now talk about what is AR. Now, AR is where you have to be extremely careful, people. This is a question with no vacancy loss. This is a question with part SOP, part LOP. Question may when there is no vacancy loss but part SOP, part LOP. I told you that we have to assume that the property was LOP for full period, even for the SOP part. But the actual rent will only be for the actual period. So here is a case where October, November, December, I got the property rent for 20,000 rupees. I will assume those are the only 3 months I got rent and I am not eligible for any other rent. So don't take AR for 6 months, take AR for 3 months. I'm only going to take AR for 3 months and then I'm going to check if is there any vacancy. No vacancy is also given, so which means I think I can take the answer directly from here. So AR is going to be 20,000 rupees for 3 months directly, and therefore the answer is going to be 60,000 rupees. Yes, now luckily for me in this ER and AR is already showing higher, so AR is already higher, so I'm already good enough to go. So I can take my AR directly as 60,000 rupees and I can proceed forward. So my GAV has now been confirmed to me. My GAV confirmation has come to 60,000 rupees, and that is how the statement is. That is how the statement is. I hope this makes sense to everyone. Yes, let's move on forward. After that, in my hand, can I do my municipal taxes? Yes, municipal taxes has been paid as 8,000 by Arjun and Rohit. And I told you, Arjun, we are not bothered. Rohit ke liye what we're going to do? We are going to take 8,000 for the full building. I don't want the full building. I only want part of the building, which means municipal tax is going to be taken for the half of the year. So I am going to take municipal tax as 8,000 rupees into 1 by 2. 1 by 2 being only the LOP part of the house, and therefore the answer is going to be 4,000 rupees. Answer is going to be 4,000 rupees. I hope this makes sense to you. Yes, next the answer is going to be 56,000 ka NAV. This is what the statement looks like. After this, people, I can directly go and find out my 30% deduction. So let's find out my deductions. My deduction number 1 is going to be 30% of NAV. Number is going to be what? 56,000 ka 30%. Answer is going to be 16,800. Answer is going to be 16,800. Second is my interest on loan. Now here is where I have to be a little careful, because interest on loan mein two things are there. One is a pre-construction interest, and the Rohit's pre-construction interest is a little tricky. Pre-construction interest generally only starts from the date of taking the loan. Date of taking the loan here is 1st September 23, which means I can't take the loan from 1st April. I have to take the loan from 1st September, and from 1st September I have to take it only till 31st March of 2025. Even though the house was completed on 30th September, I can only take it till 31st March, which means it is going to be from 1st July 23. It is going to be from 1st July 23 to 31st March 25. This is going to be my pre-construction period. Now, how much is the loan taken for? Loan is taken for 10 lakhs at 10%. Yes. So let's take the loan for 10 lakhs at 10%. It's going to be 10 lakhs at the rate of 10% for how many months? It is going to be from July, if I have to check. July, August, September, October, November, December. In 23 there are 6 months, then in 24 there are 12 months, and in 25 there are 3 months. So 6 plus 3, 9, plus 12 is going to be 21 months. So it is going to be 21 by 12. Yes, so it's going to be 1 lakh rupee into 21 divided. It is going to be 1 lakh rupee into 21 divided by 12. Answer is going to be 1,75,000. Yes, now this 1,75,000 is then going to be divided by 5, which means the answer comes to 35,000. The answer comes to 35,000. Apart from that, people, I have my pre-construction interest, apart from the pre-construction interest, I have my current year interest. Current year interest is again going to be 10 lakh at the rate of 10%, which is going to be 1 lakh rupee. Yes, so which means my total interest is going to be 1,35,000. My total interest is going to be 1,35,000. I hope this makes sense to you. Now look carefully. 1,35,000 is the interest which Mr. Rohit has paid in total, which means 1,35,000 again has to be split between both the houses. So what I'm going to do, I'm going to tell split between SOP and LOP. Yes, so 1,35,000 I am going to take, and I'm going to split between both the houses, which means I'm going to split for 67,500. I am going to split for 67,500. Yes, this is what the answer is going to look like. Hmm. 67,500 ka split, which means now if I have to take my LOP, let's check my LOP, people. LOP is going to be 56,000 ka income which I had, minus 16,800 ka 30% deduction, minus 67,500 ka number. Answer is coming as 28,300 ka loss. Yes, and SOP mein to I directly have a loss, which is 67,500. With that in my hand, I can now find my total loss. What is my total loss? My total loss is going to be 67,500 add kiya to 95,800 ka total loss. $95,800 ka total loss is what I'm going to have, which means I am going to have income from house property of Arjun as 95,800 rupees, and income from house property, income for Arjun is 2 lakh rupees, and for Rohit is going to be 95,800 rupees. This is what my final statement is going to look like. This is what my final statement is going to look like. I hope this made sense to all of you. Yes, so be very, very careful on this adjustment, people. I think this is a very beautiful question. They have done it very nicely. They've thought about it very properly to get the right answer to you. Yes, but this is what the answer is. I think it was not very difficult to the extent that you could have done the pre-construction properly. If you have noticed the pre-construction properly, you will get the answer very beautifully. If not, there can be a little bit of a challenges, but beyond that, I think the question was manageable. The question was manageable. Clear enough to go? Yes or no? Yes. Shall we move on to the last question and complete it off, my friends? Yes. Let's move on to the last question and complete it off. What is the last question looking like? Let's see if the last question has any difficulties for us or we are able to manage it off. Last question, question number 5. Question number 5 comes and says, I am Mr. Verma, a manager in ABC Private Limited, owning 2 house properties. In addition to this house properties, I have 2 cars, one of which is used exclusively for personal purpose, while the other is let out to a friend for a rent of 20,000 per month. Now people notice, I have let out car. I'm not let out a house. Letting out car and all is not part of HP chapter. That goes into IF first. So let's take it into IF first. The following details are furnished to me of the 2 house properties. He owns 2 house properties in addition. Yeah, so they've given you some information. I'm not sure what is happening with the house properties. Whether house properties have been let out or not has to be checked. So he owns 2 house properties. In addition to his house properties, he possesses 2 cars, and in the 2 cars, one of which is let out for exclusive purpose, whatever it is. I have not been informed information. Let's work with that. Yes, so the question comes and says my fair rent is given, my actual rent is given. See, people, actual rent has been confirmed to you, which means I am going to make an assumption that both the houses are LOP. No assumptions otherwise, because actual rent is given. Why would you have an actual rent when there is no SOP, when there is no LOP itself, which means assumption both the houses are LOP houses. Fair rent is given to you, actual rent, municipal value is given to you, and municipal taxes is given. People, it's always municipal value or fair rent, whichever is higher, versus actual rent, whichever is lower. Then I have municipal taxes payment. My repairs is going to get ignored off. I can't claim that. Insurance premium is going to get ignored off. Can't claim that. Ground rent is going to get ignored off. Can't claim that. Ignored information. Next, additional information says Mr. Verma has paid 57,000 as interest on loan that was secured by mortgaging house 1 in order to fund construction of house 2. Basically, I have mortgaged house 1, but the property interest is not for house 1, it is for house 2, which means I wanted to take a loan for house 2. To take a loan for house 2, I have paid interest of 57,000 by mortgaging house 1. Mortgaging and all is not going to make an impact to me whatsoever. Yes, point is I've paid an interest, but the interest is not for house 1, it is for house 2, which means this is going to be claimed as a deduction under H2. Next, additionally in 25-26, Mr. Verma acquired a rural agricultural land for 2,50,000 where the stamp duty value was 3 lakh rupees. People, now you should have acquired it for 3 lakhs, but you acquired for 2,50,000, which means there is technically a gift element. However, if you notice, this is a rural agricultural land. Rural agricultural land basically means that this is an agricultural income topic and not a part of Income Tax Act. If it is not part of Income Tax Act, I don't care about this. This is going to get ignored. This is going to get ignored. I'm not bothered about it, people. Not taxable under Income Tax Act. Go and check about agricultural income laws. Yes, determine the taxable income assuming he does not opt out of default tax regime. He does not opt out of default tax regime. Does not matlab the person is going for DTR. Sometimes reading the word is very critical. The person is going for DTR. Anyway, people, I think in this question, it's not going to make an impact because everything is LOP house only. So it's completely fine. Yes. So let's find the ER directly. My ER is 1,24,000 versus 1,24,000, which is 1,25,000 in house 1 and 3,95,000 in house 2. I think this is what the answer is going to be. This can be easily drafted off. We can finish it off very, very quickly, very, very easily. Yes, I am going to prepare my statement quickly for my friends. Question number 5. Is computation of total income of, who is this friend, Verma, under DTR rules. Yes, now even though the question comes and says I'm a manager and all, they have not mentioned anything about my salaries and everything, which means I am not going to take anything relating to salaries. I'm going to assume that this is what my income statement is. Yes, ideally when they're saying they're manager, there's a person who would have received some amount of salary, but okay, if from information is not there, what am I supposed to do with it? Yes, so I'm going to take my incomes directly. I am going to create 2 columns because I think that should be required for me. First, I'm going to take income from house property. Income from house property, I'm going to do it here, people, because it's easier that way. I'm going to take what is my expected rent. My expected rent in the question has been confirmed to me as 1,25,000 and 3,95,000. Yes, from my expected rent, let's take my actual rent out. What is my actual rent? My actual rent is given as 1,20,000 and my actual rent has been confirmed as 2,85,000. Looks like the person is not a good assessee. Yes, luckily for me, people, there is no vacancy loss in the question, so I don't care. But the answer is whichever is higher. Therefore, my GAV is going to be 1,25,000 and 3,95,000. Yes, from my GAV, what am I going to do? I'm simply going to start reducing my municipal tax. So let's reduce municipal tax. Municipal tax in the question has been confirmed to me as 18,000 and 70,000. Therefore, my NAVs, what is my NAV, my friends? 1,25,000 minus 18,000. The answer was 1,07,000. This is going to be 3,25,000. Yes, let's claim my 30% deduction. I don't think this question had any interest on, the question has an interest on only for house 2, I think. Yes, it was only having it for house 2. So house 2 alone, we'll have to claim interest on. Let's come to that. Yes, abhi ke liye 30% reduction. What is it? 1,07,000 into 30%. Answer is going to be 30,100. Yes, and 3,25,000 into 30% is going to give me 97,500. Claiming my interest on loan. Now, only house 1 was mortgaged for house 2, which means house 2 has the interest, which is 57,000. People notice I am in DTR, doesn't matter. So LOP has no restrictions under DTR. LOP remains the same. So LOP deductions can be claimed regardless of whether you are in DTR or ATR. You can claim all deductions accordingly. So that will not make a change in the answer. Yes. So by that logic, I can now find my incomes. Let's find out the incomes. What is the incomes looking like? I'm having 1,07,000 minus 30% gave me 74,900. On the right side, it is 3,25,000 minus 30% minus 57,000. Answer hits to 7,75,000. Yes, can we add these two people? Let's add these two. 74,900 adding, number becomes 2,45,400. Number hits to 2,45,400, and this is my income from house property. That's it. Simple, straightforward, no complications whatsoever, people. Yes, so this is my income from house property. With my income from house property in my hand, I think the next part of the question was about letting out of car. Yes, so I can say car let out. If I remember this properly, car let out was what, people? Car was being let out for a price of 20,000 rupees rent. Yes, so I'm going to have a car let out for 20,000 rupees. So I'm going to take a car let out of rupees 2,40,000. Yes, and then there was something called gift of rural agri land. Yes, I'm simply going to say not taxable. I'm simply going to say not taxable, and therefore my final answer comes here. Yes, so 2,45,400 plus 2,40,000 will give me my answer as 4,85,400. This is my total income. This is my total income, and this is how my chapter looks like. Yes, done, people. So much notes we are writing, so much beautiful notes we are writing, and we are already getting the answers so beautifully well. Yes, this is what your income from house property looks like. Now, there are some adjustments like rural agricultural land and all, which you probably would not know. I do agree to this fact. If you are doing the assignment right now after completion of HP, you will need some more additional time before you complete the next chapters. But once you do it, you'll already get the answer. So yes, right now completing the notes along with me is good enough. These are the reasons why you're not getting the full answer. No problem. Completely fine. Don't worry about it. As you proceed forward, you'll anyway get the right answer. So it's completely fine at this stage to not get this mark. Yes, but to the extent that you've read the chapters and if you're able to match it with mine, amazing job, you're already doing a good thing. Yes, and that is what your income from HP looks like, people. I would like to end the video with this. We will proceed forward on the next set of assignments as and when we keep completing the chapters off. Until that time, my only request is keep continuing to read, because yes, May 26 is very close by if you're attempting May 26. September 26 is not far away if you're attempting September 26, and Jan 27 is yet to come in. So nevertheless, yes, please pay attention to the subject. It is a very interesting and nice subject. Jan 26 was an unfortunate paper, and so I'm gearing up very properly for all students who are writing May 26. So we are for the first time putting so much efforts into these kind of chapters, doing so much writing practice along with you so that you get the right impression on the subject. Have that interest along with me, and I'm pretty sure the next set of papers is going to be extremely nice for you to clear your examinations. Yes, on that small motivation, I would like to close this video. I will see you on with the next set of series once we are ready with those chapters as well. Until that time, keep learning, enjoy your journey, take care, bye bye.